Hey Bitcoiners, Lachie here from Edge21. Today we're diving into the real story behind Bitcoin's latest price action. While headlines focus on volatility and macro drama, the real foundation of Bitcoin's resilience is in the unwavering conviction of long-term holders and the bold moves by institutional investors. If you want to know why Bitcoin is holding strong at $85,000, you're in the right place. First, a quick shout out to checkonchain.com. All the charts in this video come from their brilliant weekly newsletter. If you're a serious Bitcoiner and love clean, insightful on-chain data, make sure you subscribe. Highly recommended. Let's start with the numbers. Over the past week, Bitcoin has moved from 75k to 85k, but beneath the surface, something much more powerful is happening. Did you know that 63% of all Bitcoin hasn't moved in over a year? That's a record, and it's not just a statistic, it's a statement. These HODLers are the backbone of the Bitcoin network. Even after a 30% correction from all-time highs, they're not selling. In fact, the long-term holder net position change just turned positive for the first time in 6 months, coinciding with a 12% price rebound since the recent US tariff pause. This is conviction you can measure on-chain. It's not just individuals. Institutions are making bold moves. Strategy, formerly MicroStrategy, just bought 3,459 BTC for $286 million at an average price of 82,618, bringing their total to 531,644 BTC. That's over 2.5% of all Bitcoin that will ever exist. Japanese firm Metaplanet added 319 BTC, signaling that corporate adoption is going global. On-chain data shows 37,000 BTC withdrawn from exchanges in just 24 hours, a classic sign of whale accumulation and reduced sell pressure. Bitcoin is consolidating just below major resistance at $85,500 to $86,000. Technical charts highlight this zone as pivotal. A breakout above could open the path to 88k to 90k, while failure risks a pullback to 83k or even 80k. The 88k level is both a psychological and technical barrier, with a breakout likely to trigger further institutional buying and bullish momentum. Short-term holders are at a 10% discount to their cost basis, but there's no sign of mass capitulation, just event-driven, short-lived sell-offs. Despite the strong hands, sentiment remains cautious. The Fear and Greed Index is stuck at 27, deep in the fear zone. US spot Bitcoin ETFs saw $713 million in outflows last week, and futures open interest is flat. But here's the kicker. Unrealized losses are just 5.5% of market cap, far below previous bear markets. Realized losses peaked at 7,500 BTC per day, much less than the 22,000 BTC per day seen in 2021. Most holders are not panic selling. Coins are moving from weak to strong hands. The macro backdrop is noisy. Tariff drama, inflation, and global liquidity shifts, but Bitcoin's fixed supply and decentralized nature are shining through. As the US dollar weakens and inflation cools, Bitcoin is increasingly seen as a hedge against fiat instability. Billionaire Ray Dalio and other macro legends are now openly calling Bitcoin a hard money alternative. This is why institutions and hodlers alike are stacking sats, not selling. So what's the real story? Bitcoin's price resilience isn't just about charts or headlines, it's about conviction. Long-term holders and institutions are building a rock-solid foundation, limiting downside risk and setting the stage for the next big move. Whether you're a trader, investor, or just Bitcoin curious, remember, the smart money is holding strong. Where do you think Bitcoin is headed next? Let us know in the comments below. Stay tuned to Edge21 for more insights and updates as we continue to track Bitcoin's price movements. If you found this video helpful, please like, share, and hit that subscribe button. Thanks for watching, stay strong, and hodl on.